So in this week, we shall start by discussing the trading opportunities on Nifty and Bank Nifty, and we will look at some of the larger components of both of these indices to reconfirm if things are aligning properly together and to isolate some individual stock-specific trading ideas. In the meantime, amongst the wider F&O space, keep typing in any number of stock names you have an interest in or where you feel there's a tradable pattern coming up, and I shall give you my commentary on that as well if I'm able to notice any good worthwhile pattern which offers good entries and exits. And those we will take once we have done Nifty, Bank Nifty, and their constituent stocks. So as and when any names comes to your mind, those attending this webinar live can type in those names in the chat box and I'll pick them up. So let me take you to the chart on Nifty to begin with. Okay, we are starting off with this daily chart, and I will just quickly recapitulate the patterns we've tried deciphering so far over prior webinars. This fall from the all-time high, I'm expecting will work out in a 5-wave pattern, out of which only a 3-wave pattern has completed here. The lowest low is not necessarily the end of a move. There is a concept of irregular B waves, and they happen when the ferocity or the strength of the larger time frame trend is still much larger than the minor correction within which this larger corrective wave should have happened. So if this was a regular B, after an A, the B should have pulled only up to here. The fact that it has thrusted even to a lower low is to be interpreted in a way that this ongoing downtrend momentum, or the cycle of the within the larger cycles lasting several years, this down move momentum has been so huge that instead of retracing back only up to here and then resuming a rally pattern, it thrusted downwards here until here. And after that, that cyclical up move, of several months, a few months kind of time frame of up move pattern is also coming out to be far muted. It has taken up so much time. This move was so sharp, and this rebound has been very jagged, rickety, noisy, and has been consuming a lot of time. So before we go to the Elliott structures, they can't be beyond some basic common sense of some rudimentary arithmetic. If the long-term uptrend would have begun, it could have perhaps come far sharper, given the sharp fall would have cleaned out so many hands here. But this tepid bounce and this confusion and hesitation in the markets can also be explained by a mega event, the general elections in India, that are now very much close. There's a third way in which a subjective mind could interpret that for a long-term serious up move to happen, market is consuming a lot more time here in creating a basing formation, so to say, that an initial rise and the correction of this rise itself is taking so much longer time to tire people out. And we have to look at all possibilities and check in continuing to take the view that this is just a mere rally of this pattern, and this pattern is not yet complete, and this low will have to break before all-time highs are seriously broken out. We need to keep a constant check on that view. So could it be possible that a soft rally has happened and a sideways meandering? The same argument can be applied that given the budget hesitation, markets, while they may not have gone up sharply commensurate to the sharp fall, but even the correction of this rise is happening very softly, and it's happening too sharp, and in fact higher highs are getting seen, and maybe the market is preparing for a massive rise up. Should that scenario be happening, see, I'm trying to, in a logical descriptive thinking, bring to your mind possibility of a alternative pattern at any point in time. It's good to have the most likely pattern, which is what we've been discussing last 3, 4, 5 webinars. And I also want to introduce in Elliott thinking the concept of an alternative pattern. An alternative pattern does not mean that both patterns are equally likely, but all it means is should the primary pattern we are working with and constantly finding confirmations of, should it fail, what is the second highest probability pattern that can work out? So let's go back to the descriptive logic, because it's easier that way for you to, recognize a new pattern that I'm going to introduce today, assuming you've not studied Elliott wave analysis in a detailed manner. So the logic that, because of the general elections and the hesitation and the uncertainty around, markets could have been, creating, say, if this is wave one of the long-term bull market that is resumed, suppose, and this is a soft correction of that, within which, the B part was projecting above the first wave. So that, B part projecting above the end of the first wave or the impulsive wave indicates there is a much larger move ahead, which will be bigger than this. That is also one way in which we can interpret. And we will come to what this part happened and how it is adding up. So through descriptive logic, both are scenarios that you can't right away dismiss without going into some more detailed analysis. But for the time being, let me help you memorialize or remember a pattern which is often seen, or rather, which is seen only at the beginning of some major big impulsive move. Usually impulse moves 5-way patterns, because equities are long-term bull market, never ending in last several hundred years. Usually, we talk about mentally, we visualize impulses going up, but for a sustained bear market happening in a series of 5 waves, an impulse can come there also. But an impulsive, a sort of ascending triangle is the pattern I want you to remember, which is the alternative pattern we are talking about. An ascending triangle is the first wave of a 5-wave massive bull market. So we need to be conscious and, alert to examining if, I, as your analyst or strategist, am getting over obsessed with my idea, and I'm keeping pushing the point that, this is just turning out to be a corrective fourth of this 1, 2, and 1, 2, 3, 4, 5. This was wave 1, wave 2, and this formed as a 5, within which 1, 2, 3, 4, 5. So a 1, 2 wave, and a third wave here, and a fourth 1, 2, A, B, C. That's what my thesis originally here was. From here, we will go and break back below 10,000. But since it came in here on that, I think, Madhya Pradesh election day, massive gap down, and then, markets rallied, but this portion again was so overlapping. So it became a WXY kind of a thing, or an ABC kind of a move. And from here, we expected again maybe, a move going down to here, and then it will come back here. But instead of going down so much, it started coming up from here, and we came in only partially, right, that around 940 area, this move should get completed and we should sell. But after a down gap, market went up and closed above 940, and in a single day it spiked up. Last 4 or 5 days, 2-3 days, it started a distributive pattern. But let me first quickly describe the risk of that ascending triangle and how we are, for the time being, keeping it aside and eliminating. An ascending triangle is by definition a triangle, and triangle is one where, wave 1, wave 3, and wave 5 are not very separated and distinct, they are overlapping. But in an ascending triangle, even though the wave 1, wave 3, wave 5 are overlapping, as in, the rule that wave 1 and wave 3 will not enter into each other's territory, as in, the wave 4 and wave 1 will not enter into each other's territory. That is, wave 1, 2, 3, and the fourth wave will not come and hit below the top of wave 1, is suspended. But that is a unique triangle where each of the 5 parts, each of the wave 1, 3, and 5 is comprised of 5 waves. All other triangles, and there are too many of them, which always occur within either wave 2 or a 4 or in a corrective pattern, those will be comprised of, the first, third, and fifth part will only have 3 waves inside. But in an ascending triangle, the first, third, and fifth wave will each have a 5-wave part in between them, and that the fourth wave and the first wave will overlap, creating some sort of a convergent pattern between, the line connecting the tops and bottoms, giving it the look and feel of a triangle. So we will inspect here that if, say, this is 1 part, 2 part, 3 part, 4 part, and 5 part, some sort of a misshaped triangle also, you will find on Twitter and Facebook now a lot of practitioners. The more the better. More and more opinion, we filter out, and minds become open to more possibilities. But then not to get swayed by them, the simple rule to remember is, and these are not rules of nature, but these are rules of definition. We will come to that at another point, what I mean by rule of nature and definition, this obsession with Fibonacci numbers, and that Elliott wave is noticed in nature and there are some natural laws, is a completely flawed philosophy. People are over-interpreting manner in which R.N. Elliott wrote his book. He got inspired by noticing Fibonacci numbers in nature, and it did not mean that he's necessarily mandating that Fibonacci numbers is where markets must reverse. Markets are a soft science, markets are a human science, and human beings have an incentive to play games, to play tricks. For manipulation also is rewarding. Too much of manipulation has its risks of regulatory violation. But yes, markets are a human sport. So anybody looking for precision of rules in which market will behave is expecting too much from the market. But all we can as analysts do by the word rules, which cast a sort of iron frame on our minds, is market is free to do whatever it wants to do. But we will use our rules to relabel and reclassify the pattern that has evolved so far. Going back to this analogy about, how we treated Elliott wave analysis as something analogous or pretty similar to how a medical store clerk would organize thousands of different medicines, liquids, syrups, tablets, capsules, powders, antibiotics, probiotics, all kinds of complex tongue twister names of molecules in such an elegant system that even if he's not very educated, the system of classifying medicines in a store itself will make for a simple, average intelligence, a person of average intelligence also quickly find out where the medicine is. And if we simply, suspend too much creativity, too much imagination by understanding the rules of Elliott wave analysis in a simpler framework, and not to, cut it too fine. Simplicity can be achieved simply by one thing. You're not compelled to trade a market if you're not getting a confident count. There are so many stocks and symbols. Try and find a pattern that your mind is able to find confidence with. That's the biggest secret I will be ever able to teach any student of mine. The secret is about your attitudes. Otherwise, any simple system can be made as complex as we want, or as complex a system can be made as simple. The whole catch is always in the attitude. It is the market plus you together as a team who are going to make or lose money. Market itself is not making or losing money. You are itself not losing or making money. So the simplification that you would do of your attitude and suspend too much creativity, which causes us to get worried and which creates all hesitation in our hands to pull the stop loss trigger. So getting back to the point of the fear of this being an ascending triangle, which can mean that this low may not get broken at all. And, this market can keep meandering, that if this 5-wave pattern is completed, and if this is an ascending triangle, even if not a thoroughly definable triangular shape, but somewhat triangular, these are not exactly parallel lines, a loose. Somebody may try to tell you on Twitter, don't get afraid with it. Because simply speaking, you need to find the first leg, the third leg, and the fifth leg comprised of 5 parts each. If this one has gone all the way below this, or if you start counting even from here, and you do not agree that this is an A and B, say you start counting from here also, this is not really strictly a 5-part movement. Earlier, for your ease in the prior webinars, I told you this is an ABC, but it's not really an ABC. And this irregular B is also some sort of a WXY. We can go down to the hourly chart on this, do another private meeting session. But say, subject to debate whether this is a 3 or 5 or not. This part is definitely not a 5. You can clearly see. So all 3 of them, the first, third, and fifth, have to be comprising of 5 parts each. So by this portion, each chart will have some bar or a set of bars or a length of bars, which becomes a key to opening that chart. And this part comes to our help in eliminating out that this is not an ascending triangle. Had this been an ascending triangle, this could have become, say, a wave A, and say roughly somewhat retracement of that to say about 10,450, 10,500, wherever, could have become a wave 2, and a massive wave 3 could have happened. And say if this fall comes here, if this were to turn out as an ascending triangle, which we have right now ruled out is not one, but say if this were an ascending triangle and we were not becoming aware of it, and we were only working with this thesis that the pattern from here to here is, a WXY, which is what I'm going to tell you and explain why it is a WXY, and the fall starting any time from here to go and break this low now. But had that not been there, and we were not conscious that this is another possibility, had each of these parts happened in a 5-wave pattern, this was a 5 and this was a 5 and this was a 5, one would have definitely known that as a retracement comes here, we will play for an all-time high. But none of these parts appear to be a 5. And say if I take this as an A, B and C, then this part is also a 3-wave. So we will look at this part as a separate session someday, more like an educative exercise for my subscribers, and we will not put out a replay for that to ensure that you all give your time and attention to it at a mutually agreed time. So let's come back to what is the pattern that I'm finally putting my finger on it as. We were up to here, we were clear that this is happening like some sort of a 4th wave, and around here in the prior session, we were talking about this should get over at this point 10944 and we should go short. It will come down perhaps to this area 10532 or this one, and then go back to this area. So this is an important point to illustrate, and you can, for the time being, think your trainer or your mentor here or your analyst here, strategist here is covering himself up. But at some point, as you get deeper into Elliott, you will realize the power this method accords upon us to forecast several legs ahead. Not just one projection. Market from here over the next some days is going to say 300 points higher or 800 points higher. It gives us several turning points and several lengths of those points. And this is one unique method for which I've got, unique capability of Elliott wave analysis for which I've got enchanted to this method and sticking more to it than many methods in technical analysis that I've studied. And beyond technical analysis, even the quant skills, the fundamental analysis that I do not ignore, but I would put out my 100% position, my entire risk exposure, if other things are also in consonance with what my Elliott wave analysis is telling me. So, you can vary your performance. You can get closer to your performance goals also by modulating your positions based on how much clarity you have. And if the level of clarity is no more than 50-60%, the most important rule in mind to keep yourselves functional and optimal is to just, you're not compelled to trade a stock or a contract. So let's come back here. Now, if this is happening more like full-fledged 5 waves, each of them is a 3-leg. So, a W, X, Y, X, and Z has happened. Yeah, I forgot to tell you the point I was making. So when several legs of a map are getting forecasted, the correct way to trade, whether you are forecasting it yourself or somebody else is doing that forecasting to or helping you do it, that whenever a certain projected reversal area is violated and trend extends in that continued direction, you just remove from your map that particular reversal leg and you go with the next projected point in the same direction. So if our projected point was, from here, we would have come down over here in the last 3 days. And then, at this webinar, we would have been talking about this, but it did not happen and the breakout came up here. So our forecast were we would come from here and then go back there. So after this point has been violated, this line that we would have drawn as a projected map from there to here has to be deleted. And we go with the flow and we join in this and we change our map from here to here and then here to directly from here to here. Basically, we will erase that line or the projected path on the map from here to here. That's how, Elliott wave analysis has to be updated. I'm telling you this, should some weekend or webinar not happen, and if you are a little tuned up towards certain mind map of mine and there's no update, I don't want you to be left high and dry guessing. Either you don't trade that particular contract in the ways I had thought and use some other technique, or now that this has been spoken about, if several legs are forecasted either by you, me, or anyone else using Elliott wave analysis, and if the turning point is violated, then the turning point is erased from our map and we go with the larger swing forecasted in the direction of continuation. So from our prior discussions, a W, X, Y, and Z is almost completed, is what the daily chart is showing. Let's go down to the hourly to check if this is consistent, or the hourly chart and then the smaller time frame charts are showing any divergence from this view. But before that, just let me ask the scores on audio 1 to 10 and video once more, even though I have not got any alerts on my WhatsApp that anything is missing. All fine? Great. So the internet is kind to our conversation today. Thank you, internet. So now say what we had discussed was that A, B, and a C was happening here. We were talking about a C was happening, and we spoke about that this, seems like a fourth wave of this 5-wave structure, and we should come and end here. It came down here, and then at the prior webinar, it was like, okay, so if this A, B, and C has happened, see, this wave itself is telling you, come whatever may happen on this whole thing is going to be a corrective rally kind of a move. A corrective rally kind of a move means ABC or a WXY. This irregular B wave, as I told you, in each chart or each phase of the chart, some price bar or a set of bars is an immediate key. And it's like your fast forward mind tool to not keep on counting bar by bar and spend hours on a chart. This irregular B wave has already given a confirmation to me, for which I'm talking with so much conviction and confidence here. But still, many of you may be new relatively to Elliott wave analysis, so I'll go bar by bar and pattern by pattern to show you that. But looking at this, you can be pretty sure. So still, let's independently count it, and then we will come back to get an even additional confidence that this rise has to be a 3-wave kind of a structure only, howsoever it may extend. And I'll tell you that concept of extension also. But so far, we had discussed earlier A, B, and a C. So this should have gotten over here, and that's why we were talking about 10,600. And this fell down here, and we thought we are getting to 10,600. And this rebound we again spoke was a WXY only. So we should have been kind of with a stop loss above 10,940 selling down here. But if a stop loss has been hit, either we could have stayed out, or one could have taken a smaller positions, because one never knows A and an irregular B again, and another C comes, and then again an A and whatever, because this market has been producing too many irregular B waves since that massive irregular B wave at the 10,000 low. And even the all-time high we had spoken about was a very large irregular B wave that so far keeps confidence high that even if this market for some unexpected reason get down to as much as 9,200, I'm not forecasting 9,200 at all. I'm looking at 9,800 for now. But even if that came to happen, the forecast for a 13,000 kind of Nifty happening by end of 2020 or early 2021 is not at all extreme. So getting back here, if this was an ABC, a larger degree wave A happening, if this fluctuating cursor is not helping you see the point, I'll temporarily draw this line. So say a wave A happened, and whether an X wave, it's too sharp. So usually a very sharp corrective move is labeled X. X waves are typically very sharp, or we could have called it an A, B, and a C maybe. But since it's an X, okay, in the hindsight, because already this chart is extended here, we did not know it was an X. We thought the big down move to 600 has happened, and we know already that this was a WXY, and so it's an A, B, and the moment this breakout came, if one has been recently profitable, one will have the ability to lose somewhat respectable sum, either that or your own clarity. If you are able to count like this, you could have still taken a stop loss and gone full quantity long again, knowing that if this is an ABC kind of a structure, A, B, the C will be a brisk, fast. This breakout is going to very quickly and fast take us to 11,200. Also, if you were to remember a homegrown suggestion. I won't call it a rule because a lot of people in Elliott community speak of the word rule as if something sacred. No, that's a mental rule Mr. R.N. Elliott suggested for keeping the discipline of counting waves and revising them from time to time in appropriate methodology and not make it random by your own whims and fancies. He never implied it's a scientific rule that is inviolable or a rule of law or a rule of nature. In fact, the beauty of Elliott wave analysis is, which many people will accuse you for, that our wave counts change. It's an adaptive mechanism. There is nothing definitive about the market. In a medical shop also, there is no such rule or law by government or by any medical association that only certain types of medicines that have so far been discovered or created, only those will be sold by the shop. A completely new set of molecules can arise, a completely new generation of medicines will come, and a medical shop will continue to operate with efficiency. It will reclassify the system with which it stores all its medicines. But some people who've learned some basic statistics and have developed too much arrogance out of it, they will come and, even I've done an MSc in financial engineering, and I'm not saying one method is better than the other. One method suits me more, and some of you who are joining me, perhaps this method suits you more. So do not get swayed by, overwhelmed by anybody claiming to have superior knowledge. The simple fact is there is no method in the markets that can be consistently better than another method. If that were true, that there's any one single method which will always be better than another method, you've created a risk-free arbitrage. You can always keep trading in that one method, and you can always keep doing anti-trades of any other inferior methods. So it will give you a risk-free arbitrage, and such a risk-free arbitrage synthetic strategy, you can keep on borrowing infinite sums of money and become the only man with money left in this world, which is a logical paradox. So given that there will be a risk in everything connected to markets, each method will have its own risks, and based on your personality, training, available apparatus, certain types of risk-taking scenarios you find yourselves to be more comfortable in responding to. That's why you can become a quantitative trader, or you can become, a breakout-based, momentum-based trader, or an Elliott wave-based trader. It's your personality which can never be removed completely. Even if you're writing an algorithm, the personality of the algorithm writer is there in it. And if after knowing several programming languages and having sufficient enough education to be able to compete with most, I was unable to remove my personality from my trading approach. So despite spending many years in learning quantitative finance, I chose not to become an algo trader. There's nothing about one system being better than another consistently for all human beings. So let's get back to our wave counts, that yes, we are happy this is one method which facilitates systematic, methodologically driven, rule-based revisions to market forecast, and not ad hoc random change in forecast, just simply breakouts have happened or pattern failures have happened. Even in statistical trading, there are revisions that are necessary. There is nothing deterministic. Even that is a probabilistic method only. So we will revise our wave counts, but with fairly defined rules. Those rules may or may not be testable with the known amount of mathematics and statistics to mankind today. But if they are producing sufficient profits and my profit curves are statistically significant, I'm happy trading with Elliott waves. I don't need a Nobel Prize or anybody's acknowledgement to say that I am academically sound in my approach to trading. If I'm making enough for myself, that's proof enough for me. So that's what I'm telling you in the first person, so that anybody who's treating himself as my student or anybody who's happy to be my client will be confident at all times that they are not doing anything inferior to anyone else. If it suits you, it suits your personality, please carry on with what we are doing here. But if it is creating you mental anxiety, you're not able to find confidence and clarity in what you're doing, then maybe you should look for some other rule, some other method of trading. But please do remember, even in that, never try to look for something 100%, because the day you find that, you will be having all the money in the world and everybody else will be not having the money. Then also, how will you trade and make more money if there are no counterparties? So there is no opportunity or no method ever in the universe which will be risk-free. So if this was a B, and a C, a larger degree wave A, an X wave, so WX, and we have to look for a Y. So if this was a WXY wave A, wave B, we have to look for the wave C here, a 5-wave pattern starting from here to wherever. So today's discussion has to focus on between these 2 points, between these 2 lines, I need to find out, say between these 2 lines, these 2 verticals, is a 5-wave pattern over or not? Now, let me ask some of you to tell me, do you see between these 2 vertical lines, a 5-wave pattern has got over? Can you tell me in yes or no if you see that a 5-wave pattern has got over from the point where B is written up to C? Between B and C, is the C wave complete? Basically, that's what I want to ask. Yes or no? Are you able to hear me? Still, try and take your guess from, you've been attending these sessions for a few times, and I want you to get that confidence by now. No. Okay. Any yeses? Let's inspect this by trying to count if any obvious clear 5 waves are visible to us. A quick up move, no major significant down move to say that 1 is over and 2 is done. Again, jig, 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 jig. So this move has happened too fast. One more way to, choose the time frame for trading. Very fast moving markets will require you to look at faster charts, and very slow moving markets will have too much noise. So you are better looking at slower charts. The slower chart will have larger time frame. So an hourly chart is slower than a 15-minute chart, which is slower than a 5-minute chart. And the fastest chart any broker can plot is a 1-minute chart. I don't get tick by tick data on it. So let's go to a shorter time frame chart of 15 minutes to see the granularity within the chart. Say, if this was a 1 and this was a 2 and this was some sort of a 3 and a 4, 1, 2, 3, no, the 4 is like too soft. So say, still counting 1, 2, 3, 4, 5. Now it's not necessary to start counting from the beginning of a wave. See, my goal is not only to give forecasts in this webinar. As stated in the objective of these webinars, I want to create a sort of a different learn to earn program or a learn along with earn program. We may not cover 100 stocks in such a forecast report, but I want to improve the trading proficiency and trading confidence of those who attend these sessions. Merely, giving somebody a nicely cooked fish as a guest for dinner. The goal of this series of webinars is to give you a fishing rod, a hook and sinker, and take you to fishing with me every weekend. And hopefully in days ahead, you'll start catching your fish and start cooking and feeding me some. So we can, if not getting a clarity to find a 5-wave pattern, we can try to count from the other way side to find that key part of each chart. As I told you, that each part of a chart will have something key which will help you decipher everything. So let's try and find at least one 5-wave pattern in some way or the other. We know reasonably sure with so many of these other patterns, if this clearly is overlapping patterns. These are all overlapping patterns. So movement from here, say from this point to this, let me remove this. So now this will be easier. Say from movement, 1 second. Okay, I'll remove this later for any next session. From here to say here is a W only, this is an X only, and this is only happening in 3 parts. We had discussed a large gap has to be treated as a 5-part move. But since this B came and overlapped above this top, you can see, above this point where the arrow is, the movement in B at this bar is under this. So if this is an overlap that has happened, this has to get completed. This leg has become then a completed wave because this overlap happened. So we had to label this as a 3-part move. So W, X, Y, A happened. So with an A, B already here, some kind of a 5-wave pattern will come. So let's go and hunt it. And if it is not there, that means this top here is not yet final and market will see some more upside activity over the next few days. Don't go just by, this gap down opening and sort of an island forming, or an inability to go up there and this gap is there. Okay, it's creating a doubt and I'm feeling bearish. My bias has been bearish for a good long time now. And I'm feeling happier that this WXYZ phase is done. And so from that area of 10,000, whatever this noisy market is there. Now a very clear-cut move should come and we should get done with this final phase of the correction to give us the long-term bull market. But our challenge right now is surviving this week and trying and picking up some money. So this part is not giving me a five-way structure. These are all overlaps. So, if this is an A, B, and there's just one C happening, or if this part, so this is definitely an eyesore, a fake bar. Let's take the pattern from here to here. So let's focus on this pattern. This one is a fake opening price bar, a fake opening price bar. Is this some sort of a fourth wave? So, okay, let's go to this one also. Can we find a five wave? Let's go down to 5-minute patterns. So clearly in this highest point, this seems like 1, 2, 3, 4, and this is 1, 2, 3, 4, and a 5. So if this is a 5-wave part, we have found, say, is this the 5th wave of this entire rise? We start counting reverse instead of counting from the origin of this whole move that happened from, that breakout of 940 area. Say if I'm working with, this is my 5th wave, and this entire thing is my 4th wave. So say if this is my 3rd wave, this is my 3rd, and if this is my 4th wave, so, and if this is my 5th wave where the C got over, so 5, 4, and if this is my 3rd wave, 1, 2, so if this is a 1, 2, 1, 2, 3, 4, 5. So say of the 3rd wave, if this is the 5th of the 3rd wave starting from here and going all the way to here, it started from, say, this point, that is here, starting here, 1, 2, 3, 4, 5 wave. So if say this is the 5th of the 3rd wave, the 4th is too tepid and narrow. So if 1, 2, this is getting a little complex. It's difficult to confirm this is precisely happening all in 5 parts. If this is 1, 2, and if this is 3, 4, and for the 5th, 1, 2, 1, 2, 1, 2, 3, 4, 5. So if a 1, 2, 3, 4, so too many 1, 2, 3, 4, 5s are there, this entire thing can be treated as a running correction also. So if this is a 1 and this whole thing is, a running correction, but it does not look like that. So I am not going to be able to place with a high degree of confidence that this C is definitely done. So let's put it this way. This will become my stop loss for now. Given this reversal that has worked out nicely, which is looking like coming in an impulsive structure, 1, 2, 1, 2, 3, 4, 5, 6. This is, say I start counting from here. 1, 2, 3, 4, 5. So this was my 5th wave. So 4, 3, 2, 1. So if this is, say, 5 wave, 1, 2, 3, 4, 5. So 1, 2, 3. The 4th has not gone above. So this is also looking like an extended impulse has opened. So we can respect this gap down as a very tight intraday stop loss for Monday. And say for the week, my stop loss would be this area. This is looking like an impulsive C wave, but this explosive move here, and we can go down to the 1 minute also. But I'll tell you, this gives you academic satisfaction of really heavily used Elliott, but it can be abused also, so to say. But broadly speaking, the C wave is over, but we have to be cautious. And say if this was a 1 and 2, this was a 3, 4, and now in the 5, 1, 2, 1, 2, 3, 4, and some sort of a 5, 3 wave is creating 1, 2. Now this is not 1, 2, and if this whole thing is a 3rd wave and this is a 4th wave, 5th wave looks reasonably well. The C wave is done, but I can't go ahead and right here go and put 100% of my trading capacity to go short. I would have been unwinding any minor longs I took even after 10940 breakout. And as the reversal came out, maybe by the close here would have taken a small short position. But as it came down with a gap down, let's get back our RSI. Now here I'll take in the RSI because I don't need to show such a large screen to you, and I therefore put it here. So say with this large gap down here, RSI is oversold, but as you know, a divergence got formed intraday. So one would know that some sort of a rally would come. It respected the gap down. And then as I would have looked at the wave counts, it was looking like a 1, 2, and a 3 and an impulsive has happened. So this is a 4th, and a 5 may come. Now once a 5 wave will come down here somewhere. See, for trading or for keeping on doing your ongoing Elliott wave analysis, say on Monday, this gap is respected, and in the opening you find signs of weakness, and you go short again, and a low lower than this one is formed in a 5 wave pattern, and you close your profit here. If you are a very sharp trader and been going profitable continuously for many days, you can continue to trade even on minor rebounds, largest positions. But if you are used to, say, trading 5 lots for an example, I would not trade more than 2 lots on a rebound up. I would keep my powder dry for trading my full position size on the direction of the larger trend. Why? Because if we make errors in our counting or any other pattern methods in technical analysis you are using, the reason to trade in the direction of the larger range, larger trend direction is that even if you are making errors of judgment, the market force will keep your errors smaller, and it will if you are placing larger bets or bets at all only in the direction of the larger trend, then even your errors will get taken care of, and you will not land up in a debilitating situation where action becomes impossible out of fear and prayers begin. So the way to avoid a state of praying to Lord Hanuman or Ma Durga or Ma Lakshmi, requesting that let me wriggle out of this trade and not pull a stop losses, you have to vary your position size. Either stay out, or in doubt, or in movements that are against the main trend, you reduce your position size. You do nominal trades. So say if this looks like some sort of an A, again an irregular B, or a WX, again a zig 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 Y kind of a pattern, no impulsive is seen. Market is looking now weak here. RSI has also not been going up much. Even if it came back to retrace, so weakness is setting in. This kind of a lower low on RSI gives you a hint, no rule, that a downtrend has begun. So say for my very sharp position taking, very short-term position taking, new fresh ideas, not a strategic trade, taking care of my overall portfolio or overall trading exposing book, a minor stop loss is here, but under no circumstances your stop loss can be above 11,130. So about say 50-60 points, and given that already a down move has happened, and if a fifth wave comes here, it doesn't mean a jumbo bear market. A fifth wave only would mean 53535 535 pattern happens. Then maybe again a rally that lasts commensurate equivalent number of days, or at least 60-65% number of days for which the fall happened. So 535 means after this 5 happens, what should happen? I should expect that a rebound of this 5. If this is 1, 2, 3 and a 4 is happening, and say on a Monday we form a new low here of this range. So a 5-wave pattern got over. Retracement of this entire fall should typically come back and test the last 5th wave of this inner time frame. If this is an inner time frame, and then again, say if this is a 5-wave pattern, 1 happened, the 2 will go back to take away roughly the last 5th wave, and then a 3 will happen, which should be at least equivalent of this one. So I am expecting on a Nifty a bearish week next, but again, if there is no 100% pattern, my stop loss has to be this one only. Now, should we jump into Bank Nifty? And I find, it's not confirming in a similar way. It's a fairly different sort of a pattern. Now it has become even on the longer run and even for the shorter run. See, we try to isolate through a very quick visual massaging of this chart. If I can find a very quick key area to give me an anchor point to start working from. One, this part could be that, this is clearly an overlapping ABC kind of a thing, and ABC kind of a thing only. So if an AB, this has to be some sort of a C, or, this whole thing from here to here was a corrective move only. So this whole thing is an extension of only this going in the direction. This whole thing from here to there is going in the direction of this smaller pattern, which was in the nature of a corrective only. and this corrective did not end in a 5 wave, as in the move that began this one. So this area becomes this area on the chart becomes my sort of key area to give me clues of what this will do. See, if this is a big impulsive move happening, so far it is displaying strength, higher highs. We'll come to this RSI divergence, which is obviously giving clues that at least on Monday this should go back to here, or at least by Tuesday morning. And thereafter, what is where the confusion still remains. For Monday, Tuesday, Bank Nifty might have a similar performance, but with different chart structures. After that, what? So, okay, I'll come back to this. Marking this as a key area because this is an overlapping ABC kind of a move. It's not a clear-cut 5-wave move, which would show that this whole thing coming from here to here is already over, or this pattern is over. This is just a continuation of this pattern, or even this pattern is not yet over. It's this is some sort of a continuation pattern within this pattern, and this pattern began with a sort of corrective. So this whole thing will be a corrective. This whole thing will be a corrective. Now, given this, if this was an A and B, this can be a C 5-wave pattern also, and even if Bank Nifty is giving that huge strength. So say within the 5 waves on this hourly chart, let me remove this box now. Say if this was my 1 and this is 2 and this is 3. So could this be an irregular B wave within the 4th? 1, 2, 3. Why I am saying irregular B? Too many overlaps. This can't be the end of this whole move. This is not the 5th wave. See, 1, 2, 3 and the 4 here, this point is overlapping above this point. So this point is overlapping above this point, and so this has to be some sort of a B wave kind of a pattern, and this is an A. So I'm suspecting, given this is 1, 2, 3, and A, B, say, let's show it with a clearer arrow. Say this was my 1, this was my 2, this was my 3. Now, if this is a 4, this last thing is not working out as a 5th. There are overlaps in this. There's no need to go down to the shorter time frames. You can already find there's an overlap. So while RSI is divergent, so A, B, and this fall may come along with Nifty. So if a C will come, it will typically, go to correct this. So this can come up to here or even up to here. But even in that, given that I'm counting this is an A, B, and the C has to be 1, 2, 3, and if this is only going to be forming a 4th, so a 5th may come, which will go higher than this point. It need not go or necessarily higher than this. But an irregular B shows that a significantly higher than this may come. So maybe, Bank Nifty goes here, there, and comes up to say here, this area, and then goes back again to 27,900 area. Let's go and quickly check the shorter term time frames, and then we jump. We've taken a lot more time on the Nifty today, because I'm now telling you on Nifty, I jumped onto this. But now if the Nifty patterns work out, I'm looking at a move going down to 10,000 and maybe slightly lower. And the signal for Nifty is looking like already in place. So say we came down to the 15-minute chart, you can clearly see, this is all overlap, some sort of ABC only. And this is also an ABC. Given this large gap up, I will count it as an impulse 5-wave structure. And so it could have been 1, 2, 3, 4, and a 5 has happened here. And, wave 1, wave 2, and then 1, 2, 3, 4, 5. So my wave 3rd is done, wave 4 is done. And this is just, a irregular B wave happening in wave 4. So I would say that once it comes here, Bank Nifty can come back and surprise us, go back there into a higher high of the last many days. So what might happen is that if this becomes 1, 2, 3 now come back to the Nifty chart, 1, 2, 3, 4, 5, and so this rebound may come up to say 11,100 perhaps, not going above the first wave of the inner time frame, ideally going up to the 5th wave of the inner time frame of the prior wave, and not going ideally above the first wave. That's not a rule, but generally observed. So this gives us 2 clues that Bank Nifty maybe towards the later part of the week come back again on Thursday or Friday, make a higher high, and Nifty won't. So what does it tell you? That there are some stocks that are going to be much more weaker on Nifty than the banks. Prior 2 weeks, it was looking like banks are the weakest, and now, you know, a sudden spike of strength has come into banks, and they are sort of lagging behind in terms of forming a top out. Now, having discussed these two, I'll jump to one chart on the large caps in, say, the large caps in amongst the Nifty stocks. Hindustan Lever has been through the better part of the last 2.5, 3 months, been inside a large, nice corrective pattern. This whole thing is a corrective, you know, overlapping waves, whether it was an A, B, and whether it's a C happening or it's a W, X, and a Y happening. We'll come and analyze on the hourlies also. But broadly, the pattern from here to here, this is a corrective pattern of a large, nice rise, and this rise is clearly visible 1, 2, 3, 4, 5. So, or this is a 1, 2, and you know, this is the third wave 1, 2, 3, 4, 5. So 1, 2, 3, a fourth wave, and I'm visualizing from here somewhere the final fifth wave completing this whole huge up move that started from 1450 should come. So Hindustan Lever looks like, given, you know, this is a daily chart, over the next 2 weeks, roughly about 12, 13 trading sessions, because roughly 1, 2, 3, 4, this is about 12, 13 bars. This is no rule, general gut feel. A move like this is what I'm anticipating now. So let's see if this down move is already over, and then Hindustan Lever will get down to a move lasting several months that shall go back and eat away this last fifth wave. The next correction will typically take away the fifth wave or the final leg, whether a Y or a Z wave or, you know, a fifth wave. A corrective of the next order will generally be approximately in size equivalent to the fifth wave of the last pattern, or the Z wave or the W wave, whatever. So say that's far. Right now we are looking for inside a market where I'm asking you to go short on Nifty now. Can Hindustan Lever act as a hedge, or even, you know, the last big stock to move? Typically, you know, Reliance plays that fool, taking people on the wrong foot, creating so much strength and keeping Nifty higher, or not going down so much, and a lot of other stocks fall down first. But now that Nifty has started already cracking, see, Hindustan Lever is from a fundamentally very sound space, and FMCG stocks are also considered the safety stocks in an atmosphere of fear. Typically, even while many other stocks in the market are falling, money starts moving into safety. So I do not know, safety kind of buying will come into Hindustan Lever, or some positive news is likely to drive it. Whichever way it happens, we will get to know some better color of the market. So let's go and decipher through the hourly chart. Is an entry point on this long arrived already. Say this part is looking like this last leg is, let's try to find a key. This last leg is looking like it's, you know, converging. Is this some sort of a terminal triangle or a terminal C or whatever happening? Let's see. Yeah, these lines are converging, but it doesn't mean necessarily that, say, if this was a 1, 2, 3 wave A, let me make it broader for you. This is happening like a terminal triangle comprised of 5 legs, each of which is a 3-part move. So this is clearly 3-part move, the second leg. This is also, you know, a very sharp spike. We can go down to the minute by minute chart, but I can assure you the structure of this pattern is giving me decent confidence. It won't be a 5-part move yet. And if it turns out to be that, that means the up move has already begun. But since this low has already come below this has to be a 3-part move. So 3, 3, wave 2 and wave 4 are done. This is a 1, 2, 3, A, B, C. You know, 1, 2, 3 is A, B, C, A, B, C, A, B, C. This is a 3-legged move only. There's no 5 parts, and some sort of a connector and a 3-legged move. So it's not necessary that this one has to go and touch this triangle only. Within this, we have to just simply remember, if this is happening as like good triangle, a triangular pattern, the D cannot be the shortest one. So if this D is only of how many rupees? From this low of 1709, say this high is of 1730.7. So 21 rupees 70 paisa, and from 30.70 30 this was 30.70 going down to 1706, and here the low was 1709. So thing is, the D wave has become shortest in this kind of count. So we can't treat it as a triangle, but it's happening like some sort of a terminal. Now, many a times, because this rule that D cannot be shortest is ignored, and a terminal triangle is seen, and one gets into hurry that 1, 2, 3, 4, and the fifth one, the fifth impulsive, like the ascending diagonal that we discussed in Nifty, that is the first move of a wave, can be triangular, each comprising of 5 parts, and the last one, the terminal triangle, can be again 5, 5, 3, 5, 3, 5. It should be. So this is not happening like a terminal triangle. So maybe this will be more like an A and some sort of a B, and a rebound to C can happen, and an 1860 may not go. So my risk reward ratio will be like, if let's initially expect a move only up to 1780, and right now we are 1713. So let's not try to forecast till where it can go below, because the broader market is still down. But let's be open mentally to the possibility that once this red trend line on the upper side, that is a downtrend, the resistance line, this is the support line. Once the resistance line breaks, maybe we will take a stop loss point, which is the lowest of this chart so far, 1706. It will take a long trade for looking for an exit around 1780. That doesn't mean when 1780 comes, we have to take an exit. As the up move shapes out, whether it's coming in 5 parts, how it is coming, we'll update that. So keep an eye on Hindustan Lever for Monday, Tuesday. And if this trend line goes down, even while I'm suggesting a down market to you, Hindustan Lever can still be a long trade. Let me now jump to taking the charts of the few names that some of you have typed. You can tell me some Z, Wipro, and okay, we'll go with Z. Z first. I think Z has made its much anticipated breakdown in that ABC wave we were looking for a long time. But let's go and start from the daily and then come down to the smaller time frames. We discussed that this very sharp move was more like an A, B, C, or whatever kind of an extended. Do you see of the recent daily chart of S&P 500 from this chart from this area to this area? Does it look very similar to the S&P 500 chart that if some of you have been watching it for 1 second. This chart in this red box, do many of you see a similarity with how the S&P 500 chart has been looking like in these days? So, okay, I find some yeses, and I will try to go and discuss the S&P 500 chart with you today. A good idea that you brought up Z. I'm looking on S&P 500 with a stop loss anywhere higher than the high of recent few days. Very eerie sounding forecast, and I'm not making that forecast simply because it draws a lot of eyeballs, but I'm looking at a possibility of S&P 500 now going down by 20% also, going and making a new low for the year, going close to the 2200 area. And because these two look very similar, I'm not going to tell you that this low is going to go and break, but we had discussed prior also, earlier webcasts also, that after this massive fall, as a rebound had come and around this area, some gentleman was asking what to do on Z. I said, this looks like an incomplete pattern, whether this is a stop loss, we will sell and this low will break. I don't want to take a trade. See, I'm using that mental rule that either in doubt or when you don't have full clarity, you don't have to trade the stock. You wait for a certain pattern to come with which you can act with high conviction and high confidence. And that time, you go. So here I was talking about an A, B, and a C happening. So A happened, B happened, 1, 2, 3, 4 and some sort of 5 has happened, and this whole trend line is broken. And if this pattern was, more like an A, B, and some sort of a C, very on S&P also, from that 3000 whatever area it came down, it went there, and then it made such a massive down move, and the equivalent point of 2626, where one was counting 1, 2, 3, 4, and from 2626 it should have returned back to 2200. It did not happen, and above 2626 it went away. And if some of you who are engaging with me on Twitter would have noticed, last 10-15 days I was not talking much on S&P 500. I don't have to have an opinion at all times on everything. I am interested in looking for only patterns. I don't have an opinion on the American economy. I can have an opinion on anything in the world, but for my coffee table conversation. But when I'm, finding out things to do with my money in the markets, I want to keep opinions aside. I want to give up my arrogance of all my education and all my intellect. I only want to focus like a robot, certain patterns that have been working well for me. And if I find those patterns, I'll trade. Otherwise, I'll not trade that contract. Avoid S&P 500, avoid Nifty. Whenever I'll find something worth trading on Nifty, I'll come back and become a Nifty trader. So you're not married to one stock that you have to keep doing things with that one stock every day. Most of the time, Nifty and Bank Nifty will offer you opportunities, but there's no harm if for 10-15 days there's nothing. So similar to S&P 500, but that's a separate chart. Each can have its structure separately, as can be seen on the hourly. So let's go on Z now. The Z is clearly a short trade now. In the last 2 days of Nifty sort of valuing lower, this has come and broken this trend line. You can draw a sharper one or whatever. So my trend line roughly becomes my stop on this. So based on, typically, say if you are staking up to 1 lakh rupees as my risk amount on a single stock or a single position. So you divide 1 lakh rupees by this price multiplied by the number of contracts, which is X, and solve for it, and trade a position size only that much. So this trend line, after some days can come all the way up to here also. So I'll perhaps, keep this or even a little higher, be conservative. So say maybe even if the stock is gone to 460 and there was such a massive down move, again, it can create some sharp moves. You can never know. Again, a lot of bad news cannot come. So this has to be wider stop loss, and or you wait for some rebound to come. If you feel on Wednesday, Thursday, rebound can come. But the trade to now start taking on Z is down. Wipro has had a bonus, and this data feed from FGDL or whatever that everybody takes from does not create any adjustments for stock splits, which is something they should do. They are the most expensive data service in the market, and too many subscribers they've got, and they should do. I, through this webinar, want to definitely raise a rant on this point, and I'm hoping several of you will do. So this chart becomes tricky to sort of decipher with this massive gaps down, and maybe I'll find a mechanical way to adjust it, but our view remains intact. So you ignore this part, you ignore this massive gap here because of the bonus issue that has come. But if I were to just somehow pick up these 3 bars and take them up here, instead of adjusting for bonus my entire chart backwards, I somehow mentally adjusted the forward chart, then the technical analysis will still work. So if this support is broken, if this support is broken after this gap down clearly, and this area is also gone, so I would say the downtrend is pretty much intact. And despite bonus, such large sales by a private trust of the promoter holding off and selling, and look at this was an A, B, C pattern we discussed, and RSI has been much lower. So obviously RSI here is gone so much because of this unadjusted chart. But once we do this adjustment, RSI would be somewhere here. So the trend is down. I don't want to be getting long onto this stock, and given this paucity of adjusted data, we'll try and take recourse of the very short-term charts. And this too much gap is destroying this. I wish I could get Wipro on my other laptop, and the webinar is actually connected on this one. So thing is, even this RSI divergence, they're all spoiled because of this large gap. But let's try and see. No, say Now here this chart looks a little rational. That noise of these large gaps is gone, but the 1 minute is too short a time frame. So this rally also 1, 2, 3. This 4 is not here. If this was wave 1, the wave 4 is ending here, which is overlapping. So I'm still not finding an impulsive pattern so far getting generated. So if there is no impulsive pattern, this was just a rebound. So I think on Monday, Tuesday, I'm ready to see the stock going lower than this low. And as it is, on this down move, this last closing hour down move, sideways move, I'm expecting Monday, at least the stock is definitely coming down further. And on Monday, we can, adjust this chart. But my broad sense is Wipro, we had taken a nice, strong, high conviction call, is on a 10 to 12 days or 15 days, at least kind of a downtrend. We are somewhere about done 60-65% of that, maybe 55 to 65% of that. So Wipro remains a down move. Any more stocks that you want me to quickly look at and take? PNB has snubbed me, and Misal Shah, one of the attendees in today's show, has been keeping on asking about it. And yes, I think you've got a better sense on this stock. Maybe Elliott has its own shortcoming that one will avoid certain stocks and not have a clarity. I was sort of evasive and avoiding of this stock, and I said, even if there is a 15-20% kind of 10, 12 or 15% kind of an up move coming, the stop losses will have to be also that wide kind of a thing. So now that there is a pattern that has worked out, it is clearly an ABC kind of a move only. ABC, another ABC kind of a move, ABC kind of a move. So interesting. I hope again, my bearish bias is not working. Not a personal bias, but even Nifty has such a large, very counterintuitive, almost 10% kind of a down move. Everybody is bullish in the market. Sentiment is very positive. Our patriotic feelings are at a peak. We are all feeling good about so many things. So the 10% down move almost is so counterintuitive that some of the biggest people in the profession, people I've had the highest respect for, who run books of an unimaginably large size, they've almost spoken to me in a warning tone. Sushil, I'm going to be watching this carefully. And I felt greater glee. The greater the disbelief, the more convincing the pattern becomes. You trade the pattern, not the opinions. Look, boss, this looks like a five legs are over, each is 3 waves. So if this was a B, C, or a 3-legged move, so whatever, one move and equivalent of that, the 2 moves is done. So I'm again getting bearish on this stock here. And as a short-term trader, looks like there is no evidence for one to be seeking a long here. Maybe if this turns out to be this part only turns out to be, say, 1, 2, 3, so far 4, because this top is not yet broken on the hourly. So maybe it swings up further higher than this high, and I find RSI divergences on shorter term time frames and 5-minute entry points. This stock is ripe now for being shorted again, but then the same caveat about this being a very high volatility stock, and this being a stock that would require a wider stop, and also the fact that it has already fallen so gorgeously that you have to trade it in a smaller size. You got to vary and keep your size small. But I'm definitely not advising long. And somewhere on Monday, if this gives a further spike, it will be a contrarian short. So I'll start entering the short in smaller pieces. And as it comes and breaks any trading low made in the last 1-2 days, and lower lows and lower highs happen, this should be a short. Let's quickly try and take a dig at the S&P 500 chart. I think I'll be able to share my browser on this webinar instead of loading up another software where I do have intraday feeds also of the S&P 500. But I'll quickly load it from investing.com, with whom we are in the near future also likely to have a tie-up. And more details of that shall be put out on the site soon, and you'll receive emails also on that. So I have a bias to use investing.com. We have something in the pipeline, something good for everyone. So let me load up this chart on my forecast of this 20% down move and a new low is a a helpless forecast. You can't call it a confident forecast. I'll explain by what I mean when I say this is a helpless sort of a forecast. Just allow this to load up properly, and I'll go back to doing a screen share of my browser. Give me a second. Okay, so we've come here. Now let's go to the daily chart on this. So that similarity with Z is, this part, similarity with Z is visible. Uptrend line is gone, is visible. But let's not trade Z because of our higher conviction on this chart or that one. They both can be very different patterns because, these fractals of, this pattern over this time, the similarity will end on this chart at some point. So the labeling on wave counts can be totally different. So here, on S&P 500, the call so far has been that this high so far, multi-year high, all-time high here so far, this whole wave is more like a this is more like an A and a B, or WX, and again there's some sort of a Y only, because this whole thing, this is a Y, because there are overlaps. It's not really clearly 5 waves. So this whole thing WXY, this point, if this was an A wave and there's a B wave, so the all-time high on S&P 500 is an irregular B wave, similar to the irregular B wave all-time high on Nifty. So going forward in the second half of 2019 or early 2020, this should get broken. Some guys on Twitter and many other social media or other discussion forums are smoking that this should get broken very quickly. No, perhaps, if we are going to fall very heavily now and we'll go and break this part, then it will take time for us to recline back. But the long-term bull in global equities, and particularly S&P 500, doesn't seem to have gotten over. This looks like an irregular B. So keeping that aside, let's come to the shorter term time frame. Now, within why we are saying that, the fall that has begun here should go down and break this. Prima facie, this looks like a wave 1, 2, some sort of a wave 3, 4. If this is a 5-wave pattern, it should be the beginning of a new bull market, or at least, this 5 should be followed by a 3 and a 5. So why I also said my chart reading on S&P 500 has become helpless. Not hopeless, I said helpless. Why am I saying this? Counting all possible permutations and combinations of waves is a very good apparatus for doing good effective Elliott wave analysis. You keep on eliminating wave counts as not possible, that are keeping on violating too many rules, or are very disproportionate. And if, say, there is no one single good wave count available, the one that is least doubtful is your wave count and forecast. And if that current wave count will also come and break, then of course, as we know, there is nothing definitive in markets by any method, and we'll have to choose a stop loss and then one wave count which is the least harmful or the least illogical. Most of the time there are logical wave counts, and I said I'm having a helpless count, because of all the illogical counts, the one that is least illogical is the one that tells me that this was an A and this was an extremely outsized irregular B wave, and this is a 5-wave structure C wave. So of this 1, 2, 1, 2, 3, let me remove this. If this was a 1, 2, this was a third wave, now the fourth wave, and my fifth should have come like here. But if this came as 1, 2, and again this became a 3 wave only. So even if you know that this is an irregular B and there will be a C wave coming, look at how markets can be challenging for trading day to day. There is no easy simple money anywhere. Every day is a tentative day, despite having clarity on a long term. when you are moving inside the markets, sometimes markets will offer you very smooth ride. Sometimes they'll throw you out a good trade you took because of a certain target projection 10940. You took profits. You even went short, and the market broke apart and went above that. So you can, if you have a good reliable friend, call him up. But the best thing is don't call up people in live markets. You trust your instinct and you go with it. You call that person after the market and learn his trick. I want you to get empowered during the market and not move on anybody's crutches during market hours, because nobody has a definitive count. We are all adapting to things. So a better gift from me would be that instead of taking your phone call during market hours, I'd rather prepare you how you conduct yourselves inside live markets, even if that day I could not help somebody. So it's not an apology, but a really high conviction belief in that's how I would like to treat people. I don't want to make somebody weak and dependent on me. I would rather make you stronger out of your dependence on me. So, okay. So if this is a 1, 2, 3, and I'm taking this as some sort of 4 and, a B, and this is a C. So this is my least illogical count. More so, why I'm inclined towards this, to make it a 1, 2, 3 and a 4 here, and a 5 will come. And after that, a long-term bull market, a 5 will come to somewhere below 2300. Maybe, it can go to 2200 area or a little lower, 2150. We'll see that. So, this irregular B and so A, B, and C going down to 2200. So let's go to the weekly chart to try and fit more data together. So this whole thing would say, if this was an A, B, and my C would finally come somewhere here. You can even try to create a projection, but it's best not to get stuck up with rules created some 80, 90 years ago. Keep them as, a bit of salt in your cooking, but it can't become your nutrition. Keep it for flavor, but not for feeding your trading. So, no, sorry, not this one. If I'm going to use the channeling rule of 2 and 4, if this was 1, okay, this is the one. This was my 2, and this is my 4. So, I'm sorry, I'm getting fidgety here. If guys, pardon me, I'm getting fidgety with my trackpad. Oh, it's funny. Just last attempt we'll make, or otherwise I'll orally explain it. No, it's not happening for some reason. I think, maybe there is a script error or something on the browser. 1 second. Let's make one final attempt. Okay, so this is a way to project, connect the lows of wave 2 and 4. So, and draw a parallel from the end of wave 3. So along this line, this correction that started off from here should get over. The correction that started on 29th January 2018. So, this could be perhaps late April, early May, whatever. So that's what I'm looking at. And why this is the least illogical count. Let's try and see if I can explain that very quickly, because we are now already definitely running late, more than almost 1.5 hours. See why it's not still a good count. This irregular B is too stretched. I've never seen such a overstretched irregular B. But this is also not becoming a 5-wave count. So if this was a 1, 2, 3, A, 1, 2, 3, which can be taken as an ABC, and in an X wave and ABC. So either this correction has gotten over here and there's a 5-wave up move. So we'll come to know that after, so from this fall that has begun on the hourly chart, if this latest fall that has begun is a non-impulsive fall, that is, it is happening only in 3 waves, then obviously, the long-term bull market on S&P has already resumed at this point. But if this part is coming out in impulsive formation, so 1, 2, very sharp, 3, 4, 1. Now in the fifth, 1, 2, 1, 2, 3, 4, 5. So 1, 2, 3 is done, 4 is done, is looking like 1, 2, 3, 1, 2, 3, 4, 5. So this is looking more like to me, and already an impulsive sort of a stretching movement has happened. So let's wait for 1 or 2 more days to confirm. I think I should have been more articulate about telling you why all other counts are sounding more illogical. But let's wait for a couple of days more. If this area is not broken out again, 2809, say the real number is really say keep a sort of trailing stop in your mind that it should not close higher than close of 4 days ago, even if the hammer is formed on Friday, 1, 2, 3, 4. So if Monday's closing is not more than the close above this area, which is say 2700, 2790 and thereon. So we will in the next 3-4 days get down to getting a high conviction forecast. Right now it is say more than 50%, but another 3-4 days of this sliding like this, and inside an hourly pattern we find continuously impulses, then I'll keep writing more aggressively on Twitter that 2200 is coming. But if this goes and snaps above this, then of course the less illogical count would then this become that this was an outsized C of an ABC. Instead of counting this as an outsized C, which C has to be a 5-wave pattern from here to there. So an A, B and an outsized C, which is almost 6-7 times larger than A wave. I thought, A, B and an outsized B wave, and that's what it is. So let's see how S&P 500 behaves over the next few days. Next week is when, by end of next week, we should know if a long-term bull market is resumed, which I doubt at this moment. And if we are going to 2200, but in either scenario, the year 2019 should end, or say early part of 2020 should see that S&P is in galloping rapid strides into again a sustainable long-term bull market. So thank you very much for lending your ears, and do find few minutes to write out some thoughts to me. Help me, either send me message on any platforms I'm connected with you, or on an email, how you can ask me to make this webinar more productive for you. What was not so good, giving frank feedback is, you're doing no harm to me. In fact, you make me more productive, you'll do something good for me. So let me know your thoughts, and whatever is possible out of that, we'll try to incorporate. And what has a challenge, we'll give you an explanation of as to why we are not doing that. So let's keep making things better. You enjoy your weekend, and happy trading next week. Thank you very much for being here.